And I was intrigued. I saw stuff about people talking about, hey, I bought this property for $10,000 and I resold it for $30,000. And I thought, wow, I could do that. That would be pretty cool. Learned everything I could about land flipping and just went for it. We actually resold our first property in March of 2021. We did just north of 1.2 million in revenue and about 50% gross profit margin. And then in 2022, we're going to be a little bit over 3.5 million. And then again, at about a 50% gross profit margin.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. Steven, the Fed is very active.
They're active, and that actually has the reverse effect on the market. Investors are definitely less active. I was speaking to some REITs, and they told me they've pretty much hit the pause button for now and waiting to see what happens in the new year.
Yeah, it's interesting. We're seeing dramatic declines on the residential side of transactions coming into the market. I was looking at the reports that came out recently from the Florida Association of Realtors about slowdown in transactions and closings, and properties are starting to stay a little bit longer on the market. This is exactly what the Fed's trying to do. There's going to be some distortion, right, during the holiday seasons, because sometimes that positively and sometimes it negatively affects what's going on. A lot of folks trying to close before the end of the year for homestead purposes. But then we also have situations with what's going on in the bank. So there's just a lot of muddiness, noise that's happening at the end of the year. We're not really sure how that actually affects the market. It tends to be more closings and more active, but not always. So, we get through the holiday season. We're through now, and I think we start seeing the next month's data of January sales and activities. I think we're going to get a better idea. And February, we're definitely going to be seeing trends of what's happening. The Fed wants to squelch this market, and they want to slow down real estate. But the most important thing of all is they want to crush jobs, Stephen.
Well, they want to crush inflation.
Well, you can crush inflation by crushing jobs, because you crush the consumerism and you will slow down the demand for goods. The number that I look at is employment. We want to be over 4% is considered stable unemployment. When you're in Florida, in Tampa, we were like 2.1%, which is ridiculously low levels. That's not even accounting for the level of people who are naturally changing jobs. The Fed is going to be looking at that number. I look at that number because that really is a number. When you start getting 5 and 6% unemployment, that becomes a situation where companies are now less in the market, and there's a larger number of folks that are looking for jobs, don't have jobs, and that will definitely slow down the economy. And so that's the number that I look at to try to determine what the direction of the Fed is.
Yeah, well, the problem is they're so interlinked, aren't they? Because, having the such low unemployment, there's competition to get workers, and that in itself creates inflation. So we have to find the balance. I think the job rate has to fall a little bit, and in order to bring down inflation.
Yeah, really the unfortunate part through all of this is it hurts the common folk. And really it's the only tool that the Fed has. And I know common folk, they didn't do anything to deserve getting laid off, but that's essentially what the Fed is trying to do. They're trying to squelch demand for goods and services. That includes real estate. Real estate's a big, big factor in the state of Florida. It is it's probably the most significant multiplier effect that we have. In other words, Stephen, in 2008, when we had that the downturn, it was remarkable. We said, well, the real estate is X percent of the market. When you actually saw the multiple, it's a lot stronger than even I believe, because it just had this domino effect in absolutely every industry, a dramatic domino effect. And I thought we had grown out of that as a state, but we haven't. And we're still very, very real estate dependent. And what's happening with the home builders and what's happening in construction is important. But there's other factors at play. I don't want to be all negative. I'm not saying this is going to be 2008. In fact, I don't believe it is going to be 2008 all over again. One of the key things that occurred, whether you like it or not, it is a data point. And the federal government invested in an infrastructure project that's going to be counterintuitive to what the Fed is trying to do. It really works against them. But you're going to see a lot of construction activity in the market trying to build out this infrastructure that the federal government wants to try to create. So.
Well, we can pontificate, but I always go back to what one really astute investor told me, and I'll never forget. He just told me that real estate is a tremendously forgiving investment. You just have the patience, and it's all about timing. So things will come right again, and it'll be back to where it was eventually. It's just timing and making sure that you always get quality properties.
Yeah, quality properties, and what's the amount of leverage that you're taking on. This is not a market you want to be really aggressive. Taking on 80 and 90% debt. It's just it's a time that look for deals and make sure the cash flow numbers, make sure the numbers work, and then be cautious about what you're taking on in terms of your leverage, because we just don't want to get caught in the crossfire on this.
So let's talk a little bit about investing. We've spoken a lot over the years about investing in triple net properties, in office, in retail, in industrial. We've never really addressed too much about land because it's really hard to find people to talk to about that. It's a much smaller market segment, but it's an important segment nevertheless.
Yeah, particularly in the state of Florida, it's uber important, and it's a little different. I mean, a lot of folks, let's just talk about the individual investor that goes to the RIA meetings and is trying to build their business, whether it be in mobile homes or quadruplexes or small apartment complexes, whatever. They're networking with folks that are also looking for cash flow. And that tends to be the dominant number of folks that are in the market. So if you're going to buy land, the banks really don't like it. The hard money lenders really don't like it. There's a small number of investors that like it, not many. It's not a large universe. So you're kind of on your own. You really have to understand what you're buying, and it's hard to get leverage. It's hard to get investors, but it is a viable asset class. And certainly when you're buying in and around areas that are growth areas, like in the state of Florida, buying within 40 miles of Orlando or Tampa or any of these growth markets can be incredibly lucrative. But you need to know what you're looking for. You need to know how, what, when, where, why. So I'm pretty excited about having a guest on that. We're going to talk about that today, Stephen.
Yeah, let's roll right into it because I'm looking forward to that too.
Well, first, let's do a little housekeeping because we want to talk about reviews. And I'm sure y'all have noticed that the number of podcasts that we have been recording recently have dropped. And that's the result of it's hard for us to find guests that are fresh. We don't want to keep going back to the same guests. I mean, we have a lot of terrific guests. But I mean, a lot of you guys have heard our contacts in the market. So that's issue number one. But issue number two is when we're reaching the people outside of our market that might not know who we are, they will do research on us to see how many downloads there are, what are our listeners saying. And it helps us a tremendous amount when you guys leave reviews, because that's one of the first places that our potential guests will go to. So you make it easier on us, but in the end, it helps you be able to get the content that you want. Go and leave us a review. Get your friends to leave us a review. We will read it. We'll recognize you. We appreciate the time and energy you guys spend with us. But it is a symbiotic relationship we have. If you guys are leaving reviews, you're helping us get guests that are in your marketplace, and you're referring people to us. We'll definitely follow up on those and try to get the kind of content that we know that you guys are looking for and that we find to be interesting as well. So if you've not done so, please go to the Apple iTunes store and leave us a review. And if you have somebody somebody in your marketplace. It might be you that are listening, and you have something you want to talk about that would be beneficial for our listeners. And we're not like Bigger Pockets. Stephen is one of the big podcasts out there. We've never tried to be those guys. They're serving a different market. Our market has always been Florida. And we do talk to people outside of the state of Florida, but we want that guest to feel connected to Florida. So we had a lot of inquiries from like financial advisors in Michigan, and they might have vacationed in Florida, but they don't really know anything about it. Those are the folks we're probably not terribly interested in, because that's really not what we're trying to build our podcast on. We're trying to build our podcast on the individual markets and talk about those things. So if you guys know folks, or it might be you, that you think would be beneficial for our listeners to hear their story, we want to hear about it. And we'd love to get you on the show and talk about your market and talk about what you're doing in your market. And that's what makes our show special. Steve, is there anything else that we need to cover housekeeping-wise before we roll into our guest?
No, I don't think so. Let's roll into it. Today we have with us Pete Reese. Pete is the president of RealVest Properties, a land development and investment company. With nearly 2 decades of real estate experience as a broker and investor, Pete has successfully purchased and sold hundreds of pieces of real estate for profit over the years, for himself and behalf of his clients. He is on track to earn $4 million of revenue in 2022 with his land flipping and development business. Pete is always looking for his next deal, including his longtime dream of owning his private island. Besides his professional accomplishments, Pete is also the father to 3 beautiful girls, keeps up with his family by working out and enjoying a vegan diet, and he is the 31st great-grandson of King Henry II. So I'm busy curtsying now as I welcome Pete to the Invest Florida show.
Well, thanks, guys. Appreciate you having me on here. I appreciate that great intro.
Yeah, and of course, our listeners don't know this. And normally, Pete, we really appreciate you showing up today. But today, I got to thank you especially for putting up with ineptitude. Usually, it's Stephen I'm giving him hell about one thing he's not doing or another. I literally, guys, we just had a conversation for half an hour, and guess who didn't push the record button? Yeah, yours truly. So I really appreciate you being patient with us, Pete.
Oh, it's no worries. It was a good warm-up.
It started to catch up with me.
That's right.
But anyway, again, appreciate the time you're with us today. Why don't you talk to us a little bit about how you got to where you are today?
Sure. Well, my journey in real estate started like a lot of other people. And in the year 2000, it was that we bought our first home. My wife and myself bought it with an FHA loan in Southern California. Here it was $200,000, which seemed like a whole heck of a lot of money at the time. And held it for about 2 years, made $50,000, thought I was the, some sort of real estate aficionado. But it actually propelled us into buying other properties, and we started flipping homes as a result. And one thing led to another. We were starting to do very well with land flipping. Got my broker's license out here in California to kind of get some better access to deals, kind of show some properties to myself without waiting for my agent that I was working with at the time. And then the market crashed, like fell off a cliff. And then at the time it was like, flipping homes is probably not the best thing to be doing right now. Especially on the buy side, there were just no buyers. It kind of all dried up. So we just kind of shifted gears, and I became an REO listing broker for the banks. The foreclosures were selling here in Southern California, so I just shifted to that. Did that for a number of years and kind of went all in on that. And it was a great learning experience for me. Met a bunch of other investors that way, started finding them a bunch of deals. I knew what they were looking for from that perspective. So that was a really successful kind of partnership for a while. Shifted gears into another business for a while, another online education business that we own. Got the itch a couple of years ago to really get back into real estate investing ourselves. Read some stuff online about people that were investing in land, doing land flipping, and I was intrigued. I saw stuff about people talking about, hey, I bought this property for $10,000 and I resold it for $30,000. And I thought, wow, I could do that. That would be pretty cool. So I went down this whole rabbit hole, learned everything I could about land flipping, and sort of took the model that I learned and adapted it a little bit and just went for it. In 2021, which was the first kind of full year when we did this business, we actually resold our first property, went for it 2021. we did about $1.2 million in revenue, just north of $1.2 million in revenue, and about 50% gross profit margin. So on average, whatever we buy, we try to double it. So that's kind of our benchmark. And then in 2022, we're going to be a little bit over $3.5 million. And then again, at about a 50% gross profit margin. So it's been a fun ride and learning a lot.
I can't help but notice that the contact on your website is a Raleigh, North Carolina telephone number is a 919. So tell us about that. And I know you're doing most of your deals on the East Coast, correct?
Right. That's correct, yeah.
Tell us about the Raleigh connection.
Yeah, I mean, that's just kind of a central location that we picked. People, believe it or not, people are skeptical of Californians in big parts of the country. So I was getting a lot of flack for being a California investor buying on the East Coast. So we decided, well, we'll just open up a location on the East Coast. And it's pretty much just mail and, phone number and everything. But we use that on a lot of our outreach in the, East Coast area.
Yeah, it's a good thing you pick the South too, because the South has its own biases, and the only people they distrust more than people from California, people from New York.
Yeah. I'm from Pennsylvania originally, so yeah, I get that. Yeah.
And you would be third.
Yes, I know.
So tell us about the kinds of properties that you focus on and what the sweet spot is.
Sure. Yeah, at this point, what we mostly focus on would be considered rural land. Most of the properties now are 10 acres or more, and they're generally an hour to 2 hours outside of sort of a major metropolitan area. Sometimes they're a little bit closer, but it just kind of depends on the actual area. But yeah, so these are not, what you would consider to be infill lots or in a city or even a town, sometimes little towns, I guess. But most of the time, they're just larger, vacant rural properties that don't have had no development done. Sometimes we'll buy parcels that have been farmed in the past, or a combination of farmland and woodland or something like that. But a lot of the land is pretty raw, And
so what would be like the average price tag on these deals?
Mostly right now, I would say an average purchase price anywhere of kind of the average right now, anywhere from $30,000 to $150,000 is kind of the range that most all the properties are falling within right now. I used to do properties that were less, which have great profit margin, but it's hard to really make a considerable amount. Kind of when you buy a $5,000 property and you sell it for $20,000, that's a great return, but it's hard to really make those numbers add up. I prefer, $50,000 or above.
So you said you're reaching out to people by letters. What are you saying to them in the letters?
Yeah, it's a real basic 2-page letter. First page is kind of why we're reaching out to them, who we are, what we can do for them, which is essentially offer them a quick cash close and an easy transaction. Second page is an actual purchase agreement offer that we send to them. It's based off of their actual parcel number, their acreage, and average pricing for that area. So we obviously offer a pretty aggressive price on our offers, and it works for some people and it doesn't work for others, but generally gets the phone ringing at least enough to make the mail way more than pay for itself.
So what do you think your hit rate is on the letters that you're sending? Is it a 2% response rate, or less than 1%, or?
Yeah, we don't really track the response rate because there's too many variables. Because if I put if I offered a more aggressive or a higher price, then we get a lot better response rate. Or, certain types of properties that have better response rates. The metric that I really like to track is cost per acquisition. And right now that's costing about $3,000 in mail for every one deal that we purchase. When we average out all of our transactions, it's about $22,000 profit on each deal we do.
In each one of the letters you're sending out, you're actually giving them a number? You're giving them a price?
Oh, yes. Yep. Sometimes the offer price is off. Sometimes we're right on. Sometimes we're either too high or too low, though. But when they contact us, they'll either accept it, they'll call back and say, well, I think you're too low. Can you come up higher? And we'll look at it and see if we can. And sometimes they contact us and they contact us back and they're like, hey, I want to do this. But then it turns out that we were too high for one reason or another, because we don't evaluate all these properties before we're sending it out. not in depth at least. So maybe a property is landlocked, or maybe it's all swamp or something like that. And obviously, if that's the case, then we're going to have to either adjust our pricing or pass on it altogether.
How's that conversation go when you have somebody you've sent them a letter that's too much and they say, hey, yeah, I'll take that, and then how does that conversation go? You go, oh, this is not really what I thought.
Yeah, we're just honest with them. We take a look at the property and we say, okay, well, this is a swamp and it's landlocked. We'll say, hey, didn't realize, your property is 100% swamp and it's 100% landlocked. So in order, in that case, if it was 100% swamp and 100% landlocked, we're not moving forward on it. But if it was a property that we were interested in at the right price, we would just say, hey, based on these factors, here's the best we can do. And we kind of just pivot from that initial offer completely and explain what the current situation is. And they know, most of these people, they know like what the limitations are on the property, and they probably knew the offer price was too high, but maybe they were hoping we just wouldn't realize it and go forward with it anyhow. But so we're just honest with them, and we say, hey, here's what it would take to put the deal together. And if they get angry or they're upset and it doesn't work or whatever, that's fine. We'll just move on. It's not a big deal.
So you talk about flipping properties. Generally, when I think of flipping, it's somebody who's a contract holder and they're not taking possession of the property. They're going to flip it before closing or even at closing. Are you doing that, or are you taking possession of the properties?
Yeah, we're actually buying them. We're actually taking possession of them. I know there are some, investors out there that are doing that model, like they're just wholesaling the contract basically, and maybe trying to resell it to another investor and make some sort of cut in the middle. But we actually close on the properties ourselves.
So when you close on a property, then you're going to factor in that you're going to pay a real estate commission because you obviously going to list it, I guess,
right,
as soon as you close on it.
Exactly, yeah. So we've got a number of costs. We've got due diligence costs when we're researching the properties. We send out a photographer and someone on the ground. We do a number of things. And then we've got the purchase transaction, which we go through a title company or an escrow company, depending on the state, or an attorney. So we've got those buy-side transaction fees. And then on the resale side of things, we always list our properties with brokers or agents. So we've got the commissions to pay, and then we've got the resale closing costs as well. So yeah, all those costs definitely get factored in.
Now, you're doing most of your deals with cash. It's your own money.
Right.
But there are times that we know that you're doing deals that are a little bit outside of your reach. So talk to us about that, how you're getting other folks to invest with you, and what are you committing to them from a return standpoint and that sort of thing.
Yeah, in this business, there are certain people out there that will partner with you on these deals. And when I say partner, basically they're the money partner. Obviously, I find the deals and put everything together, but when there are a few deals that I've done in the past, which are larger ones, that I said, well, I'd prefer to bring on a money partner. It just kind of makes sense in this situation instead of trying to, lay out all this cash. Like, for instance, we did a property that was $315,000 purchase price. We ended up reselling it for $595,000. So there's a good spread in there. There was a good profit margin, but what we did in that situation was found a money partner, and basically they put up all the money for it, and then we split all the profits on the deal. So that's generally how it works in this business. Like, if you find a deal, if it's an actual deal, then there's an abundance of money partners that will be willing to step up and kind of work with you on something like that, because it's a win-win for them, because they get a really good return on their investment in generally a short amount of time. So. And
have you ever lost money on deals?
I'm knocking on wood. I haven't lost any money on any deals yet. There's been a few dogs I've made on the one property. I think we made $100, another one $500. So there's been a couple of them that have been very slim profit margins, but I consider those wins because I didn't lose money and I learned something big on those deals that I won't repeat in the future.
Talk to us a little bit about the data, because that's going to be everything. That you're targeting, there's 30,000 parcels in a county, or 100,000, whatever the heck it is. And, you only want what you want. So how are you getting that data, and how are you deciphering it and breaking it down into a level that is acceptable for you to be able to then send mail out to?
Yeah, I use a company called Data Tree, which is a First American company. They collect parcel information all across the United States, pretty much every single county and parcel. And they have all kinds of filters where you can build lists from that. And you can, search by acreage, search by if there's any structures on the property, search by all kinds of things, like how long the people have owned the property, the assessed value, lots of different things like that. So we just build a list accordingly. Generally it starts with an area that we like to focus on, and then it starts with an acreage size. And obviously, since we're only mailing land, we remove any of the properties that have structures on them. And we build a list in that manner. Then we go down and we kind of filter out a lot of the sellers that we know that are never going to sell to us, like a municipality, a utility, a railroad, or a university, all those types of property owners that we know will never sell. So we filter out all those people and we come up with a list, and then we build a giant spreadsheet, really. We put in offer prices kind of based off of the averages for a certain area, and we back off the percentage that we need to in order for it to make sense for us. And then we do a big mail merge and letter that, I generally send it out to I always send it out to a company that then sends out the mail for us. They do that mail merge, they send out the mail. I don't have to lick any envelopes or anything like that.
And is there anything special you're doing from a mail merge? Is it, yellow letters, little stickies, or anything to get them to open that letter? Or is it just your standard bulk mail that's going out?
It's standard class mail. It's pretty basic, I guess, but I haven't done any of those fancy letter type things because they cost a lot more.
Sure.
Per letter, and I'm sending out a lot of mail. I'm sending out 50,000 letters a month. So it costs me about 50 cents per letter I'm sending at this point. So if I were to, use some sort of other type of mail, like the kind of fake handwritten ones or special envelopes or something, it might cost me up to $1, a piece of mail. That would either double my mail costs. That would either bring it from, $25,000 a month in mail costs to $50,000 a month in mail costs, or I'd be able to send out half as many. So it's just kind of a little bit of a balancing act, I guess.
So how do you go about selecting an area? If you're going to send out that much mail, you're probably going to want to focus on areas that you think are going to be good fishing grounds. What's
Right.
a good fishing ground?
Yeah, kind of just look at the market really in each individual area. I'll kind of just break it down by county, and I'll look at the public data on something like Zillow or Realtor.com. For instance, if I'm looking at a particular county, the first thing I'll look at is our criteria, 10 acres and above. And then I'll see in that county how many of those properties within that category sold in the past year. And then I'll look at how many properties are, say, for instance, 100 properties in that county sold, they're 10 acres and above over the past year. And then I look in that same county and there are 400 listings within that category. Then I know that it's not such a hot market. There's a big glut of inventory, not a lot of sales happening. In theory, it's 4 years worth of inventory, if those were the numbers. But if I look at a county and I see that there's only 10 active listings and 100 that have sold over the past year within that category, then I know it's a pretty hot market. There's not a lot of inventory. And I know that if I get a good property, it's going to sell right away. And that's my goal. I want to sell the properties right away. I mean, generally, we're averaging a hold time of 60 days only. So these are really short-term holds.
So you're paying the short-term capital gains on that.
Oh, yes. Yeah. It's all short-term, regular business income, like any other business, really. It's not any sort of long-term hold where you get a special tax advantage, or we're not 1031 exchanging these or anything like that.
So walk us through a typical deal. $50,000 that you're purchasing for, you're
Right.
sitting on it for 60 days, and you're selling it for $100,000?
Yeah, and when I say selling it for $100,000, that's after paying commissions and closing costs and everything like that. So say we're into it completely for $50,000. That's with the buy side, transaction costs and everything. And then on the resale side, we might list it for, $119 or something like that. And by the time you do a little negotiating or whatever, we might end up netting $100,000 after commissions and closing costs and everything like that. So that's generally, the average type deal.
And what's your rule of thumb when you're pricing these properties? You're looking at, say, the tax assessed value and then marking it down by 50% off of that? Or because I don't know how it is where you're buying, but in the state of Florida, more or less a rule of thumb, it's about 80% of the actual market value for what's listed as tax assessed value on the tax assessor's website. But I'm just curious what formula you're using to try to make an offer.
Yeah, we base all of our values off of the comps and also broker opinions, brokers that we work with. So, in some areas, their tax assessed value is way different than the actual value of the property. Some areas it's pretty spot on. But generally, for instance, if we're in an area where it's a pretty healthy market, there's transactions happening, but it's maybe not super hot. What we look at doing is pricing it slightly below market when we put it on there. So we price it kind of below where the comps are at. So we're trying to get a quick sale because, and then, the price is the ultimate thing that will help us with that if it's a good property.
But what about on the purchase side? The purchase side, like
on the purchase price, we're trying to buy things for, maybe 35% of retail value. We're not going to list it for retail value, but that's kind of the general rule of thumb because that gives us some room for all the transaction costs on both sides, costs that we might have to put into the property to kind of make it retailable. And then it allows us to price it slightly below market on the resale side as well.
I really liked your analogy of that you're basically you're the dealer, the car dealer. Right. People can sell their property on their own on Craigslist or Facebook or whatever, and they can hopefully get top market value for it. But then along with that comes a lot of tire kicking, a lot of nonsense. And what you're doing is basically saying you're like the dealer. You come in and you say, I'm not going to give you as much if you sold it on Facebook Marketplace, but I'm going to close in 10 days and it's going to be cash and there's not going to be any tire kicking and nonsense.
Exactly. Yeah. We're the easy solution. We're cash. We're quick close. And obviously we're not the right solution for everyone, but we're the easiest solution. We really try to stick with that. We don't make the sellers jump through any hoops at all. And we make a decision quickly, like, hey, we'll do it. I'll make a decision and just say, hey, we're going to buy this one. Obviously, we do all our due diligence and everything, and it goes through title company, and they do their own search. And so we just make sure everything's good. We make sure everything is what we thought it is. But as long as there's no weird red flags that come up or something, we're going forward, and we're not trying to renegotiate or any of that kind of stuff. So,
have you been able to develop a profile of who your typical seller is? Or who is your seller?
Yeah, there are certain categories that I see coming up over and over again. A lot of times it's people that inherited a property. Another common situation is people that have purchased a property years ago, have not done anything with it. Maybe they had dreams of building a home on it or doing something with it at some point, and they just don't use the property, and it's kind of out of sight, out of mind. So we get a lot of those. And so that's kind of the main categories, I guess. And then sometimes we run into people that have tried to sell the property, but for one reason or another, maybe they didn't take some of the steps that they needed to take in order to really make it retailable. Maybe I can look at a property and say, okay, well, if we cut some paths in this property so people could access the interior of it, it would be a lot more valuable and it'll be a lot more marketable. And sometimes people just put stuff on the market and they way overprice it with an agent or whatever, and it didn't sell. And then they're kind of throwing up their hands and say, I just want to sell this thing. So we get those type of people that, they were never really looking to get top dollar or anything. I mean, I guess that would be nice for them, but their intent was just to sell the thing. And they might have just languished on the market because whoever they used to list the property or do whatever just never put any effort into it. They priced it too high and it just never sold. So they figured it's not going to sell anytime soon. So they look at an option that I'm able to offer, and it's appealing to them.
So, Peter, if people want to reach you to find out more or perhaps do a deal, how can they reach you?
Yeah, the best place to go is turningprofit.com. So, again, that's turningprofit.com. And on that site, you'll see that I do a monthly income report. And in those income reports, I break down how much revenue we took in that month, how much gross profit that month, how many deals that we did we do. Each deal I break down, what did we pay for this property? What did we sell it for? How much gross profit? How many days did we hold it in our inventory? And also a description of how that deal went and, what did we learn? What was great about it, what wasn't so great about it. So those types of things. So it gives you a lot of insight into how I do land flipping, at least. And, if you're interested at all in that, it's kind of eye-opening, I think. Because when I started, there was very little information on the internet about people kind of being transparent with it. There was stuff out there, but it wasn't really in detail, and there's no way to really verify that it was real or not. So I probably went a little too far, and I'm maybe oversharing as far as that goes. But I just look at it from my perspective, and when I started, what would be really cool to see, and that's why I put it out there. I don't have any sort of training program right now. I might offer something like that in the future, but for right now, I'm just putting as much as I can out there. So if people are interested, they could definitely learn from it.
Now, I know that you've been focusing on the East Coast, but you've not really done much in Florida. But you either just dropped some mail or you're starting to drop some mail. Can you talk about where you're looking at and why you're looking there?
Yeah, Florida, I know of some other land investors that have a lot of success in Florida. I just haven't really dove into Florida. I love the state. We've visited a lot, and so I have nothing against the state. In fact, we really enjoy our time there, but I just haven't done it yet. We just did put together a batch of mail that I don't know if it's going to be hitting in the next few days or next week or so, but hopefully we'll start having some deals show up here in Florida over the coming weeks, and I look forward to it.
Is it a particular area that you're looking at? You're dropping your mail?
Yeah, it was kind of, I believe, in northern Florida mostly, some of the more rural interior areas, I guess you could say.
Okay.
Yeah.
And so, one last question before we let you go. We've kept you long enough already, but newbies that are biting off probably a little bit more than they can chew on a deal, it's hard to find lenders. So, and it's hard to find equity partners because it's a different asset class. Most gravitate towards the cash flowing properties. So how would you suggest that a newbie looking for someone who might have an appetite for helping them, whether it be on the debt or the equity side, to get started?
Right. Yeah, well, definitely there are money partners that will look to partner on these type of land investment deals with you. I don't have a list or anything like that to provide, but I may be putting together something like that in the future. And we're launching a podcast as well here in January, which is all about real estate investing and land investing. And I plan to have on some money partners to talk to them about what they do and what they're looking for and that type of thing. So I guess the best thing to do would be just go to the website so you can follow along with the podcast, and hopefully there will be some content coming out about that pretty soon.
Terrific. Pete, really appreciate the time that you've invested with us today, not just once, but twice.
Once more with feeling.
That's right. Once more with feeling. I learned a lot the second time too, Pete, believe it or not.
Good. Yeah. I think the second call was better.
Stephen, is there anything else before we let Pete go?
Thank you, Pete. We really appreciate it. And we'll see you on the flip side.
That sounds great. I really appreciate it, guys.
And that was Pete Reese talking about land investing, land flipping. Stephen, what were your thoughts about speaking with Pete?
Well, first of all, Pete's a really smart guy. I mean, he's shown that in the course of his career, he's been able to pivot from 2008 to going into REOs and then finding other opportunities. Pete goes fishing where the fish are, and he's identified a niche in the market that many people ignore. But it's not that easy just to jump in by yourself. You have to know what you're doing, and it's a numbers game. I really like what he's doing in that, there's not a lot of people going after those rural areas, so those aren't the kinds of people that we're used to, where every day they get a bunch of postcards and letters and phone calls soliciting them. They're happy to get a letter, and Pete solves a problem when he offers to purchase their property at a steep discount.
Yeah, and it's different than investing in brick and mortar. You buy a house in St. Pete, you buy a house in Miami, as long as it's relatively clean in a decent area, there's always going to be a demand for tenants, meaning there's going to be an opportunity for cash flow. Land is one of those situations where frequently there's not much demand for it. And so Pete has developed a system that allows him to buy the properties correctly and be able to sell them. And he's looking in those fringe areas we talked about that are in the path of growth, that there is going to be demand for it. And he's buying it from those individuals that I think we determined that it was folks that might have inherited it, or they bought it, they don't really know what they're going to do with it, or they bought it and the carry costs on it, the insurance and the taxes and whatnot, they just don't want to pay it anymore. They just want to unload it. So he's identifying those three types of people.
And it could be part of what we discussed before. We're in a changing environment now. Maybe some of them had debt and suddenly debt's got a lot higher.
Yeah, 100%.
So it's an opportunity.
Yeah, and of course, he's buying relatively inexpensive parcels and he's using his own cash because, as we discussed at the opening, it is hard to find lenders that are going to step in with you, and it's hard to find investors that are going to want to hold with you. But look, the uncertain times that we're in, inflation is an issue. Land tends to do better than other asset classes during inflationary periods. So, really enjoyed having a conversation with Pete. Other great guests that we've had in the past. Stephen, how can folks find those people?
Well, the place to go is to our website, www.investfloridashow.com. There we've got an archive of podcast interviews going back many years, and it's a wonderful resource. The other thing that you should absolutely do is download the app on your mobile device so you can listen when you're on the road or in the gym.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.